guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists. So today we're going to talk about the difference between FICO and FICO credit scores and which one is real. So let's first answer that question. Is there a scoring model called FICO? No, this is a joke, but there are many different credit scoring models. And it's really confusing for consumers, and they contact us to do an application, and we obtain either a soft credit check or a hard credit check. And they find out that a credit score that we obtain might be different from what they know one to be. Either they found out that last week when they received a credit card offer or a car loan, or they got something notifying them on their phone of what their credit score is. So let's get to the facts here today and talk about what is your real credit score. That is not an easy answer because there are over 100 different credit scores that you as a person can have. Why is it so confusing? Because there's different algorithms, different formulas that exist that companies put together to try to find out really what the source of a credit score is to determine in the next 90 days how likely you will be delinquent on your credit accounts. So you're trying to predict something that's going to happen in the future. And we all know we're not, mind readers. We can't predict everything that's going to happen, but that is the goal of what a credit score is. A lot of times people say, well, I've had 25, 30 years of perfect credit. Why shouldn't that mean something today, even though I was late on my credit account or my charge accounts were higher than they were 6, 8, 10 months ago? Because that's what a credit score really is trying to determine, is what the future is going to provide to a lender or credit card company, bank, mortgage, credit union, you name it. All those places you can go access any kinds of loans that exist in the marketplace. So most people know that there's Experian, Equifax, and TransUnion. And yes, those are 3 credit scoring companies, but inside of each one of those companies, they have different models that whether you go apply for a car loan or a student loan or a credit card or a mortgage, they can use a different scoring model, i.e. algorithm. Just like when you type in a search on the internet, if you go to Google, Yahoo, Bing, you might be able to get the same results, but each one of those searches might be a little bit different in regards to what score exactly comes out. So why is this so complicated? Because now, day and age, we use a lot more apps on our phone, we use a lot more internet access, and we're seeing free credit scores coming from our banking institutions, our credit card institutions, saying, here's what my credit score or your credit score is. And that's what people think when they see that number. That's a black and white number, and that's the same for everyone. And I compare it to this in our lending world. If we had 10 appraisers go out to the home, we should get 10 different appraised values. Are they all going to be close? Sure. Same thing happens in regards to your credit score. There's going to be 100 different scoring models out there. Are all of them going to be exactly the same? No, but they're going to be within a range that determines what's going on. So what we're talking about today is we handle mortgage lending. So in regards to mortgage lending, there's only 3 approved scoring models, actually 5 scoring models that are approved, 3 of them that we generally use, and they're getting updated here in the next couple of years. So for Equifax, we use Equifax Beacon 5.0. It's a specific name of a scoring model. Experian uses Fair Isaac version 2, and TransUnion use FICO Risk Classic 4. Those are some weird names. Yes, because those are the specific algorithm or formula of a scoring model that's used for mortgages. Why do we want those? Because that's what Fannie Mae and the secondary market and Freddie Mac says we should use, because they feel those are the most detailed for obtaining a mortgage. Where if you're wanting to borrow money on and for a car, they might use a different scoring model that might be geared more towards what the future of their car payment history is going to be. So these algorithms can look at credit a little bit differently for what the lending needs are in regards to financing. So which score is correct? They all are correct. They're all a credit score, but they're all going to be a range, and they're all going to be close to what you're at. But if you're seeing a free credit score, in my experience, that can be off from what we use to pay to get your credit score. And a lot of people say they go directly to Experian or directly to Equifax or directly to TransUnion. But I will tell you, they're not giving you these same scoring models that we as lenders have access to. They only sell that product to us as licensed lenders. And we have to go through background checks and office checks, visits, and go through a lot of steps to have access to getting those credit scores. Where if you're going directly to their website, they're going to give you a credit score from a different scoring model. So is it all a negative thing to obtain your credit score for free? No. I tell all my clients it's a good, valuable source to follow your credit, to see if anybody opened up any accounts, to see if there's any accounts that have any lates or issues. So it's good to have access to the credit. I can tell you 25 years ago, it was against the law for us as lenders to give you a copy of your credit score. Nowadays, people have the opposite, more information than they know what to do with, but they don't quite understand that there's different models out there that will give you a different credit score. And so when we do applications with clients, they'll say, I already know my score, it's this, so why do you have to pull my credit? Well, because that's not exactly the one that we need to use to put your loan through an automated system for approval. Obviously, the FICO score model is very specific and very driven. Vantage has a different type of scoring model, and all of these have a little different formulas. So this is why your credit score is a little bit different. We would love to sit down and chat with you and explain to you exactly what's going on with your credit. We understand what credit does to you and how it can be used in getting approvals. We've been looking at credit scores for over 25 plus years and 30,000 credit reports later. So we're just a phone call away here at Mortgage Specialists. You can reach out to us anytime, 402-991-5153. Check us out on our website by Googling Mortgage Specialists, and definitely hit that like and subscribe button below for more accurate information in regards to getting approved for a mortgage and starting your real estate needs and desires. Have a great rest of your week, everyone. We'll see you here next time, and make it a great day. Mortgage Specialists. Driven, trusted, reliable.